Okay, good afternoon, everybody. Today is Friday, the 29th of April, 2011. This is Brian Shannon from alphatrends.net. Let's take a look at these markets here. The S&P 500 finished with a gain of 32 cents today. Very good week for the markets overall. And, the big pattern that everyone had been looking at did come true, or, so far it's broken the neckline and that resistance at 138, the neckline that is of this inverted head and shoulders pattern. And this is what a lot of people have been talking about, myself included, that right shoulder was developing. We were talking about it, and what you look at, a traditional way to measure a price objective is to take the height of the pattern, which up here at 134 we could call it, and down at the lows we can just call that 125. So 125 to 134, basically 9 points. You add that to the breakout point, 9 points added to 134 would give us a price target of 143 on the upside. So that's one way of measuring a potential upward objective. The other thing I wanted to talk about here was the just what's simply known as the measured move from point A to point B. Should equal what becomes, this would be B to C, then C to point D. So basically the low here is 125.38, and the high that we had seen here for this measured move was up at 134 basically. So that's $8.62. So this move, the height of this to there. Now, so that's basically where we get our measured move off of the inverted head and shoulders pattern. The other way to look at it would be from point A to point B, and then we get our pullback, which is point B to point C, and that gives us an upward objective then of point C to point D. So basically where that would give us is a much more conservative upward target of 138.18 or so, 138, let's just call it. So we have two ways of looking for a bullish objective. One would give us basically 138, the other would give us 143. Personally, I think you're better off looking at the more conservative upward target and not get so focused on this bigger level up at 143, which is definitely obtainable, I think, at some point here. Looking at the weekly chart and just the pattern and where the prior support and resistance were. So basically, back in 2007, we had support at that 143 level, which became resistance in 2008. So I think that's obtainable at some point. But also, you have to remember that the market's not going to just go straight up to that level. I mean, maybe it does, but I would prefer to just kind of keep my target a little bit more conservative. If you look at since this move began, and we had the big gap higher that occurred on the day that Intel reported earnings, we've been pretty straight up here in the S&P 500, and it's been a real very steady tradable upward stair stepping higher, that is higher highs and higher lows. And we can look for these potential levels of resistance, but it doesn't do us any good to sell short once it gets there. For instance, we want to just look at it and say, where's the potential for this market to go? So we give the benefit of the doubt to the buyers and say, how much room is there potentially left to the upside? But as I had mentioned on Wednesday, really our focus needs to be not on chasing stocks that have already moved, but instead to look for some of the lower risk ideas that have established good bases where we can keep a stop pretty close by. So if you're a day trader, obviously you can go after some of the bigger the stocks that are seemingly extended and that sort of thing. It comes down to knowing your time frame, and generally when I do this show, I'm talking from a swing trading standpoint. So we've got a strong market. We broke that 134 level with conviction here and really never looked back. We had a little consolidation midweek. We made it through the Fed. We made it through really now the bulk of earnings season. We've got all kinds of reasons for worry behind us, in this market, and now the market just continues to grind higher on momentum basically. So when we take a look at the Nasdaq, the Nasdaq had a good week as well. Kind of slowed down here the last 2 days, but still holding above the highs that it had made earlier in the year, and that's a good thing to see. You take a look at the 10-minute time frame, we see it's grinding higher a little bit in here, but maybe starting to correct a little bit more through time. I think that again, you want to always keep an eye on these 5-day moving averages, like we had seen on the last correction. Let's just go back to the S&P 500 for a minute, and I'm going to add a couple more days just to give a better perspective. But where we are in this uptrend, it would be nice to see maybe a pullback early next week to the 5-day moving average. That is, the market catches up to it, or we pull back towards it. What we typically see though is the market doesn't just cave in all at once. People try to pick the tops and sell short the spider and that sort of thing. But as we saw in the last rally, what happens is we get tests of the 5-day moving average. We turn back and forth, and then we were in this range and we broke it. Then the trend of the 5-day moving average was lower, and that's where it made sense to make short-term trades from the short side. Obviously, again, that all changed really with the big catalyst. I'm still going to give credit to Intel. I think a lot of people underestimated the power for Intel to lead this market, but that's really, that's when this rally began, and it continued to move higher right up into the close today. I mean, pretty much closing right on its highs. That might have been partially due to some rebalancing and money flowing out of Apple into some of these other names, but anyways, Intel continues to be a very strong stock, and the semiconductors, very strong pattern in here as well. Now, when we look at the semiconductors and where these guys are, they're up to the highs for the year, and we made new highs basically. It wouldn't be unheard of or unwelcome, I think, for these semiconductors to pull back maybe towards 36 even next week, maybe just a little bit of a pullback. So if we get a little bit of a pullback in these markets, then that would be a bullish thing. But for now, we continue to see that support levels are holding, and until we break below $36.30 basically and stay below it for more than a half hour or so, you still give the benefit of the doubt to the buyers in the semiconductors, and in, of course, the Russell 2000, which closed for the second day in a row at an all-time high. So broad strength in this market. There's the Russell 2000, that's 2,000 stocks. There's a lot of stocks going higher, and a lot of opportunity to make money. If we took a look at a measured move objective in the Russell 2000, we could take a look at that and say this low in here at, let's just call it 78, and just to keep the numbers round, we'll call this 86. So what is that? 8 points, and we add it to the the pullback low of 80. Let's just call it 81, just to be conservative. That would give us an upward objective near about 89. And again, those are loose numbers. I'm not trying to be precise here, and I don't think you want to be precise. Like, you don't want to buy a pullback to the 10-day moving average or the 50-day moving average. Those are just levels to look for potential support, like we saw. The 50-day moving average, for instance, in the Russell here, that was an area where the battle was fought, and the buyers came out on top, and they continue to be in control of this market with this series of higher highs and higher lows. So in the Russell 2000, I think next week we'll probably see 85.5 will maybe be an important level for this market. That's about where we're going to see that 5-day moving average on Monday. So if we break below 85.5 and close below it for more than a half hour or so, perhaps we become a little bit more defensive and look for the next pullback, and we'll see what happens there. But for now, the information the market's giving us continues to be bullish. The financials, a lot of people were observing this bearish flag, and just continue to grind higher. It's up to the declining 50-day moving average, and really in this bigger range, and I think you look at that range as 1580 basically now to 1670, and we're pretty much in the middle of it. And as I've been saying for a while, I believe they were pretty much a waste of time. Gold was up $31 today, all-time highs in there at 1550 or 1563, I guess. It just jumped right in there, but 32 bucks in gold. Silver was up 42 cents and up. Let's take a look at the intraday time frame in there. Starting to get a little choppy, but still clearly in a giant uptrend. Something else that was, people were noticing that natural gas is broken and closed above its 200-day moving average. Don't forget that natural gas is in this horrible downtrend. I think that maybe you start looking at natural gas, but this is going to be a bigger level. If it can run up to maybe 480 or so, and then back off, and even kind of create, that would be a pretty messy one, but create a right shoulder. And we don't even need to call it a right shoulder in an inverted head and shoulders pattern, but what would be nice to see is if it rallied up to that 480 level, which had been prior support that turned into resistance, and then just simply pulled back and created a higher low. So maybe so maybe we get a run up to 480, then pull back to 460, and that could set up a bullish run for natural gas. You can look at some trend lines here, and here's one important trend line that was broken here in the last couple weeks, and that is from the high basically of the third quarter of 2009. This trend line was broken. It doesn't make it bullish, but it says the rate of descent has clearly slowed. We've still got this bigger level, and if it can, like I said, run up to there and then pull back, make a higher low, then maybe natural gas is going to get going here a little bit. Crude oil is right, closed at the highs basically for the year here, so still something to take a look at. Sometimes those even well, I like to look at those little ones, but they haven't shown any volume in here lately. But you can get some really leveraged move in some of those little what are they, like BDCO, Royal, LEI, and those types of things. They're really junky stocks the way they trade, but when oil gets going, and you can sometimes get some really nice percentage moves. But again, they are basically junk stocks. Let's take a look also at the euro. The euro versus the U.S. dollar. I mean, the dollar weakness is something everyone's talking about. We could look at the UUP. So the UUP, this is the ETF for a dollar index, and you can see it just continues to grind lower, and at let's take a look in here at these lows. That what happened? Oh, I know. For multi-year lows, decade, who knows? But it broke that bigger support at 22, and like my buddy Upsider said, that was a cute little rally attempt in the dollar yesterday. So anyways, the dollar is getting hit not only against the euro but other currencies as well. And when we look at that euro, you can see the euro's been in this fantastic uptrend. Let's take a look at the stocks. On Wednesday rather, some of the stocks we had looked at were included some of the biotech stocks, and I was talking about Celgene. Celgene got a little bit choppy here, and they had some kind of news. It gapped down and got hit hard, but recovered nicely. So I haven't traded Celgene in the last couple of days because it just got a little bit too choppy in there. But what was it? GPRO, that was another one. GPRO, another biotech that had a massive move. Vertex has had some news recently that's been favorable for it. But the two that actually, two of the ones that I've been talking about, reported earnings this week, and I had sold both of them the day before earnings. One was that PPDI. I had sold it in the afternoon this day to avoid the earnings response, and fortunately, fortunately I was out of it. Not fortunately that it was lower. I mean, I wouldn't have felt good about my sale if it was higher, but it's just part of a discipline that I don't want to be in when this potentially happens in PPDI. The other one was HGSI, and I forgot who mentioned it on Twitter yesterday, but someone reminded me on Twitter. They asked me, hey, are you going to hold HGSI? They're due to report after the close, and I didn't even know they were due to report, so whoever that was, thank you. But I did end up selling it yesterday yesterday, and we had a gap lower in there today. Now these are still constructive on the longer term time frames, but I don't think it's just quite that they're quite ready to go yet. Let's see. We also spoke about, and I continue to hold some of this Tesla, we're talking about the potential for a short squeeze in here. And this is, my strategy in this stock, as I'd mentioned it first on the 21st right in here. And I've been holding it, holding a small piece. Initially, I got involved heavily and realized that it was kind of a crazy trading stock and really just kind of choppy, and that's what's been happening is we get these rallies and then they sell off. So it's been pretty choppy action. It's not the type of stock that I generally like to trade, but so I compensated for that by holding smaller share size and thinking that, well, maybe this thing can get going, because as I had pointed out, there's a huge short position in there, and that short position actually increased here with the most recent data. You can see that the data from April 15th, so from March 31st to April 15th, the short position increased by 1.3 million shares, or about 10%, from 13.1 to 14.6 million shares. And that was, again, if we can take what we want to do is take a look and say, well, how does it feel to be short that most recent batch, basically, from that was put on between March 31st, this day right here, and we'll draw a volume weighted average price line through April 15th there. So the average price was at $26.50 approximately, where they added that additional 1.3, or I think I said 1.3 million shares was added between there. Well, if you remember, we've also been talking about the volume weighted average price since that gap higher. Since this gap higher here, we'll draw that volume weighted average price across, and that's where I became bullish on the stock when it cleared that level and held above it. So this stock is, the buyers are in control on a year-to-date basis. The volume-weighted average price down at $25 a share, and since the beginning of the year, the short position has increased from 7.1 million shares to 14.4. So it's doubled. So 7 million shares have been put on at approximately 25 and a half. You could go through and get a little, do it a 2 weeks at a time and do the math to really figure out where they're short. But approximately 25 and a half is where they're short. So you would think that's going to give some pressure to those guys, and it wouldn't feel too good. To me, it looks like on Tesla that it seems like it's getting a little bit extended here. I wouldn't be surprised to see it pull back down towards 26.90. I'd like to see a gap and then kind of sell into it, I guess. But Tesla does still look good. And we were also talking about Take Two, which I'd mentioned on Wednesday during the day, saying it was a potential breakout candidate right in here, and it did break it the next day. And unfortunately, I always sell into some of this strength. Don't sell my entire position when we have a bullish looking chart like this. But when you get a big move like that, I think you always want to take some off. Anyways, the next day it gapped down. It didn't really recover quickly, so I got out of the balance, and of course it recovered. But anyways, that was still a decent trade, and the daily chart looks good. I think if you're more patient about stops than I am, that this would probably be a good place near about 1570 if you're looking to hold it longer term. But again, I believe it was May 5th that they report earnings, so that would put it at about Wednesday or Thursday of next week. So be aware of that. What other stocks did we talk about on Wednesday? We spoke about WPRT, and by the way, Josh Brown, Downtown Trader, I'll retweet it later, but he did a nice piece on the CNN or Yahoo on the Yahoo thing with I forget their names right now, but talking about the fundamental story for companies like Westport, and he did a really good job, I think. But Westport still hasn't broken that $26 level convincingly, and that's really where I think we need to see this stock get above. So I think that's a good idea to keep on your watch list for next week, above 26. Now, if it ran right through that level Monday morning, take into consideration where would your stop go. I mean, would it go way down here about 25.10? If you're comfortable with a stop down there, then adjust your share size accordingly for what I consider to be a wider stop. I did get a question from somebody who had sent me an email. They had purchased my book and said they're enjoying that, and hey, could I take a look at this stock IMMU? And IMMU, if you look in here, what he had pointed out to me as well was that it has a big short position, which of course is nice to see when the stock is rallying. That we've got shorts trapped that are going to be, and I don't know when they started adding this pop up on NASDAQ, but it sure is a pain in the ass. Anyways, it's been a steady short position. It really hasn't changed at all over the last year. It's basically remains 8 million, 9 million shares. So there isn't a fresh history to that short position. But if we take a look at, well, what's the stock done over the last year, it's basically gone sideways as that short position has. So you would think that these shorts are beginning to would maybe start to reconsider their position. Maybe they're short from a good price way up in here, but it's been a year and a half since it's been at this level basically. So I don't think that it's wise to be short a stock like this. And but it's immunomedics. Maybe they know something about the science of the company. These biotechs are obviously very tricky. You can have some pretty crazy stuff happen with them. But IMMU, real nice run this week. I mean, it broke out from a nice little tight consolidation in here. It only trades about 390,000 shares a day on average. So today we had about 4 times that. But I think that if you're in the stock, obviously you're in a good one, and you want to protect yourself with a stop underneath whatever you believe is the proper high or low. I think maybe it pulls back a little bit. This prior resistance at 410 area becomes support maybe. Worst case stop, I'd say you'd want to be about $4 a share. But anyways, that one looks like it has potential. I would be looking for it to maybe pull back on lighter volume at some point next week, and then look for a continuation, as this is a pretty important longer-term level of consideration. Dan, my buddy Dan, wants me to take a look at PDLI, and here's another, it's another biotech stock. They had it looks really dangerous to me. This stock, it's really, gap down, gap up, gap down, gap up. Hasn't gapped down. It looks like it's due for a gap down, and I'm kidding, but a lot of gaps lower in this. It looks really dangerous. If we back it up a little bit to the weekly chart, let's take a look in here. So I know that Dan, you research these things pretty good, so you probably have a good handle on what they do. I would say that again, whenever I look at a stock, and I look at a few things. The personality of the stock is this one tends to really hurt people badly on a regular basis, and that's been its pattern for years. I mean, this thing kind of scares me to death. Look at it back in 2006. Let me just change that scaling a little bit better. 2007 and 8. I mean, we got all these huge moves down. This type of stock, I wouldn't trust it personally based on its history of gapping down. But the other thing is, where has it come from? Where does it have the potential to go? Recently it's had a decent run from, let's just say, 5 to 6.5. So it's run 30%, I guess. And where does it have the potential to go before it's likely to encounter a source of supply or resistance? Well, this prior support from 2009, late 2009, early 2010, did become resistance here a few times, and now it's expended some good energy getting up to there. So in this case, if it were to pull back and make a higher low, I would be more interested in buying it. But it seems extended, it seems dangerous. If you know something about it, then I guess it's maybe more of a fundamental story, Dan. I'm just guessing, but I would personally steer clear of it. But that again, that's my deal. Let's take a look at the short interest in here. I mean, whatever the short interest is, they've been pretty good. They've been pretty right about it, I would say. So it was 15 million shares July of last year, got down to about 9 million shares, and they're building it back up. So the shorts looks like they trade this thing pretty aggressively, but I don't know. It's a little too crazy for me. I don't see any other questions from people, so let me just make sure. And I don't. So that'll do it. Hope everybody had a good week here, and I'll talk to you again on Wednesday of next week. Have a good weekend, everyone.